ask our panelists to come forward, and I will turn things over to Professor Ted Moran for our next session.
まして、よろしく桑原です。コロンビアのビジネススクール卒業です。そうですか。何年ですか。2004年。
あ、そう。
はい。
あ、そうですね。こちらのビジネススクールの研究所で
そうですよね。
勤めていてけど、インターナショナルフェアス
シーパーに。
はい、教えてはい。
Thank you very much, Adam. We now turn our attention to some of the tricky and difficult issues of corporate governance reform. You have detailed bios of our speakers in front of you, but I will follow Adam's lead, especially for those of you who are watching us or are going to be tuning in later. Our panel leads off with Tasuku Kuwabara, who he warned me that I wouldn't be able to do it, but I think I'm okay. Who has a specialty in the McKinsey Global Institute's healthcare practice. I might say, by the way, that Lindsay and I found that a lot of the Japanese investment in the United States in the R&D is being done in the healthcare and pharmaceutical sector. Then we have Alicia Ogawa, who comes to us from the Columbia Business School. Speaking of spillovers, we at Georgetown have been looking north to the Columbia Business School to provide a model for us for a long time. So I think that spillover tradition will continue today. And then we have Kalpana Kochar, who is Deputy Director in the Strategy Policy and Review Department of the IMF, but she also has prior experience as Chief Economist for South Asia at the World Bank. So, thank you very much.
Yes, okay. So thanks for the kind introduction, Ted. I'm Tetsuku Kuwabara from McKinsey & Company. I'm partner of McKinsey based in Tokyo. Very pleased to be here. Pleased to be here particularly because this is the Washington, D.C., which reminds me of my previous life before McKinsey as the foreign service. I was a diplomat. And I was engaged in the Japan-US relationship at the time. So I'm very happy to be here. Also, I'm so honored to be at this seat with Professor Ogawa, given that I'm also from the Columbia Business School. I got the MBA there. So quite a good connection I can observe. And somehow it's not on my resume, but it's probably good to share with you. So I think today, just before getting into the discussion, I'd like to also, in line with what Michael Chui, my colleague from MGI, did, I'd like to share some of the highlights about the report we recently published around the future of Japan. Mike and myself are the co-author of the report, and I was contributing more from the inside Japan as a management consultant. So we believe this is highly relevant to the corporate governance topic today. This report is to contribute the ongoing discussion or debate about Japan's growth. It's a joint agenda for the public and the private sector. Our key message of the report is we identified the potential for Japan to make the progress towards the growth at the annual GDP growth rate of 3%, quite higher than the expected trajectory, but of course significant efforts are required. The key is to grow the productivity, particularly around further value added. We'll hit on those through some of the pages here. Let me start with this page. This is describing the comparison of the US, Germany, and Japan as to three countries' labor productivity as of 2000 and 2011 at the bottom. In the middle, two lines are describing where those enhancement of the productivity came from. If you look at the US and Germany, majority of the growth of the productivity came from the increase in the value added. On the other hand, Japan has improved the productivity, but mostly from the reduction in labor hours and limited impact from the value added. Reduction in the labor hours, reflecting the overall demographics and also some of the cost cutting, I would say. So I would say that Japan's growth on the productivity has been more of the passive side compared to the US, Germany, which pursue the higher value added and improve the economy. We believe Japan can change the trajectory because there is a sort of the learning we can make from Germany. We actually make a bit of a comparison with Germany. As of 2000, we think there is a similarity between the Germany as of 2000 and the current Japan. If you look at the GDP growth rate, both low, public debt is a key issue. Your IMF report also significantly emphasizes that point. And the challenge in the demographics also very similar, represented by the 1.4 or 1.41 of their birth rate. If you look at the strength side, both economy is led by the R&D, particularly through the manufacturing sector, and has the strong technology base with the significant investment in R&D against as a percentage of GDP. SME sectors are very thick for both economies, and talent-wise, very diligent, dedicated talent base exists both in Germany and Japan. After 2000, Germany, we believe, took a quite significant effort to improve their economy, including the fiscal and monetary policies. We believe the direction that Schroeder took since 2000 is quite, in a sense, in line with the Abenomics, the first arrow and second arrow. Of course, the degree would be different, but directionally it's quite similar. So we believe that Abenomics efforts to make the trajectory of Japan towards the growth is into the right direction. That said, is there anything further? We believe yes. There are more things Japan should do. In relation to the third arrow or beyond, which we call the fourth arrow. This is the key identification assessment we made in the report. We believe that Japanese economy, as of 2025, could add 28% more of the value added on top of the expected trajectory of their growth. We made several deep dive assessment across the multiple sectors. And I will show some examples, but across the sectors, we identify three common themes for Japan to pursue the growth in the value added. The three are on the right-hand side. The first one, which has the highest impact, is for the Japanese private sector to adopt the global best practices. Going global is, of course, important, but beyond that, for instance, Japanese corporations are very, very good historically at the manufacturing capability, development capabilities. However, the more global the Japanese economies and Japanese corporations become, the complexity and the required level of the skills management across the value chain is going to be further important. Pre-manufacturing phase, there is the sourcing and procurement. We talked about outsourcing, but sourcing the procurement, being the best practice around that is very important. Post-manufacturing, there is a global supply chain management, marketing capabilities across the world, tailored to the different needs of the markets, and also pricing, discipline at the pricing, and get the further value added from the after-service sales, for instance. Second category is the embracing the next generation technologies. Big data is a big word, but we believe big data has a significant impact going forward for the way the business is going to do, and the corporate governance should matter on that side. The big data it would enable like a retail financial services sector to offer much better services and products at the disciplined price, and also the additional value added to the customers through the better understanding of the customer's behavior. Even in the manufacturing sector, adapting the new technology into the manufacturing process is going to be very important, given that many of the workers at the production sites will get older and older, how to support them, how to innovate the manufacturing process line in line with the workers they are going to carry. So that's the second bullet point. The third category is put the performance, put the discipline on the performance is the third element. So industry structure and discipline. In some sectors, yes, this would lead to the consolidation and to create the global champions for the private sector. So the impact is different by sector, but overall, those three are the common themes we identified. Most important message here is that particularly around global best practice adoption and embracement of the next generation technology, that is on the hands of the private sector and would be achievable without waiting for any actions on the government side. It could be achievable under the current regulatory schemes. Not all, but majority. We assess that 50 to 70% of the impact can be achieved through the private sector's efforts. Let me, just to add some color, I'd like to give you some color on the advanced manufacturing. We made a deep dive assessment, advanced manufacturing, retail, financial services, and healthcare sectors. If you take the look at the report, you can see those in detail, but I'd like to introduce just an example of the advanced manufacturing. Advanced manufacturing is the sort of the heart of Japanese pride, I would say. We believe we are very good at technology base. We believe this is the historical strength of the country. I hope everyone agrees. Advanced manufacturing would comprise of the three subsectors. First one, from the left-hand side, electrical and optical equipment, basically high-tech and the consumer electronics. Second category, before this page, start from this. So the same category. Second category, machinery, like the construction machinery. Third category, towards the right-hand side, transport equipment, basically automotives. We compare Japan and the United States in terms of the labor productivity across these three subsectors. It's quite clear that the left-hand side, high-tech and the consumer electronics, have demonstrated the significant widening gap between Japan and the United States. US has been much more ahead. We digged into that and why it has been happening. So this page, in the same subsectors, we assessed the composition between the value added, including labor costs, and the intermediate input costs, and out of the total revenue of each of the subsectors. We compared that between Japan and the United States. Portion-wise, if you go to the right, it's very similar. Japan has actually a higher value added in the automotive. If you look at the left, picture looks quite different. Interestingly, if you look at the non-labor cost base at the absolute term, Japan and the States are around the same. But the proportion is quite different between the value added and the input cost, which means US has been yielding much, much higher value added, in particular in those high-tech and consumer electronics sector. There are several reasons. One is clearly the business portfolio argument. And in the previous session, there was a discussion around the software versus hardware. I think it's actually at the macro level, it holds a lot. Basically, the sectors which are bigger or growing are more around the software and IT services globally. In those sectors, if you look at the horizontal side, which is the Japanese company's global market share, Japan is at the very low end in terms of market share. Japan has much higher market share where the market is small or not growing, particularly around the hardware side. And investment, the tendency of the Japanese corporations, R&D investment tendency of the Japanese corporations, also at macro level have been quite focused on the hardware rather than the software. So there's one component of the business portfolio and the investment portfolio argument. There are a couple of other reasons we believe. Another big reason which matters for the corporate governance topic is we make an investment, we mean Japanese corporations make the R&D investment particularly into the manufacturing capability technology itself. However, in order to get the value out of it, you have to commercialize those technology globally. Then the capabilities you are required to have goes beyond just technological capabilities, i.e. marketing capabilities to get the understanding of each of the market and talent base, investment into the talent base. Some the research we quoted in the report as well identify the Japanese corporations' investment into those talent and organizational capability for the globalization or commercialization of the innovation is being very much limited and much lower than other OECD countries. But we actually we strongly believe there is a very, very optimistic view or a positive view that Japan can lay out. And as I mentioned, 3 types of the actions: adapting the global best practices, embracing the next generation technology, and putting more discipline in the performance will lead to the completely different trajectory for Japan's economy. In the middle, this is the historical or current picture of Japan. 1% or less of the GDP growth, world ranking number 16th in terms of the GDP per capita. But if Japanese companies take actions across those 3 dimensions I mentioned, then Japan can completely change the trajectory of the growth picture. Actually, the 28% further value added will lead to the bigger box outside side. So the 3% GDP annual growth rate towards 2025, the productivity enhancement speed will be doubled. The GDP per capita can become 1.5 times bigger than the current picture, which will result in the number 5th in the world. Yes, this is the aspirational figures, I would say, if under the condition that if Japan and Japanese corporations take the serious actions across the 3 dimensions and capture all the potential, Japan can get there. The key message again is, in the end, majority of these opportunities are at the hands of the private sector. That's why we call those actions as the 4th law on top of the Abenomics government-led actions. I'll be happy to have any discussion debate going forward, but thanks for listening.
Thank you. Alicia. Swoop.
Oops. I want to thank Adam for inviting me here today. This is a subject that I think is one of the most important aspects of the Prime Minister's third arrow. It's an issue that's close to my heart occupationally. Thank you for the kind introduction. I am an adjunct prof at the International Affairs School at Columbia. I'm also on the staff of the Business School Center on Japanese Economy and Business. My occupational interest is that I am actually a consultant to one of the major hedge funds in New York. I am, in fact, their entire research department on Japan. And when I tell you that this fund is $30 billion under management, you can get in some kind of suggestion of the level of interest that a firm, even of my size, of the one that I work for size, has in Japan. And the key issue for them is the level of corporate governance in Japan. So I'm trying to suggest to you how important this issue is. For most investors, this is the key issue for Abe's third arrow. In my previous life, I worked 15 years as an equity analyst and a research director in Tokyo, where I was the interface between corporate management and institutional investors. I'm only telling you all this so that you can fire questions at me later on the subject that I feel most passionate about. Corporate governance in Japan, let me move here. Hello. Is it the top one? What am I missing? Okay. Corporate governance in Japan, I think, is capable of releasing benefits to the economy, but it also is I can't think of a better word, an attack on the traditional organization of Japanese society in itself, on the respect for meritocracy and seniority, on the suspicion of innovation and risk-taking, on the distaste for flexibility and surprise, the suspicion of, or the dislike of using outsiders into an organization, a family, a country, on the system of lifetime employment. And so my focus today is to tell you what Abe's program is and to highlight some of the negative consequences, if you like. Adam referred in the last panel to the fact that in terms of labor liberalization in Western Europe, it's not clear that the benefits are distributed equally, certainly not naturally. Policy is needed, and I'd like to suggest where some of those danger areas lie. So corporate governance is the balancing of many things, and in the case of Japan, I'd like to point out that the government is a very serious player in this web of relationships. Japanese companies, I think more than many other places in the OECD, listen very carefully to what the government wants them to do. And if you allow this is a zero-sum game, right? Certain players will see their influence increased and certain will see that decreased. Why can't I learn how to do this? So this is a survey from MITI. It says, who do you consider your top 3 stakeholders? And it's clear that most Japanese companies consider their customers first and foremost, their employees, their suppliers, and last and least really is shareholders. Individual shareholders rank above institutional, which is interesting. This class of investor is declining, just as it is in other developed economies. And a lot of these are people who work for the companies. They own their own company's shares. You'll notice that bondholders are not on there, by the way. Why is Japanese corporate governance a problem? We've heard from Kuwabara-san and the previous panel many of these things: low profitability, low productivity. Many world-class Japanese companies, companies who have been market share majority holders for decades, are beginning to see that slide precipitously. Prime Minister is very concerned about this next one, high cash balances. Japanese companies right now have $3 trillion worth of cash on their balance sheet, which the Prime Minister would like to see them spend on investments and on higher wages. Bad governance creates opportunities for fraud. We've had a number of cases in Japan in the last 3 years that could rival anything we've seen in the United States. Misallocation of resources. This is a very tired topic in the academic research about how many companies in Japan, subsidiaries of subsidiaries of subsidiaries, really have no reason for being except to absorb excess staff. And in light of this environment, the whole picture is a kind of disincentive to inward bound FDI. So the Abe administration's main goals in trying to promote more better corporate governance is to, as I said, to encourage companies to spend some of that cash, get us out of deflation by raising wages and spending money, to increase the diversity of the workforce. We talked about women in the last panel, but all kinds of diversity, to increase full-time permanent jobs. The first term that the Prime Minister had, which he had to resign from because of health reasons, he introduced this concept of Sai challenge, which I don't know how you translate it, as a second chance, kind of. And his idea was all these people who got hired as temporary or contingency workers should be given a chance to transfer into permanent staff. When I asked him if he's still thinking about this, he says that he is the biggest example of Sai challenge. He's looking for all of this to support higher stock prices, which he himself has kind of identified the level of the stock market as an indication of the success of his own policies, rightly or wrongly. The Government Pension Investment Fund, $1 trillion, one of the world's largest pension fund, has been reformed in several ways. The reform, in my view, is woefully incomplete, but short story. They have transferred a lot of money out of Japanese government bonds into stocks. A lot of this new legislation is very tedious, so I will try to be very high level. The government has introduced a new corporate governance code, which applies to all listed companies. The Tokyo Stock Exchange also has introduced new requirements for listed companies. None of these are enforceable, but they are highly suggested, and the companies will be required to either comply or explain why they're not complying to the new requirements, most of which center around the number and level of independent directors on company boards. There have been new revisions to the Company Act law, which are legal requirements. Most of these have to do with allowing a new structure for Japanese companies' board organization. There is a new stock market index which has been launched by the TSC, which encompasses just those companies that have high levels of ROE. And what is significant about this is that the country's largest investor, the GPIF, has made this new index a benchmark. So the hope is that other investors will follow and direct their investments to companies that are doing well on ROE and well on corporate governance. There's been a revision of the corporate tax code. It's not much to brag about right now, but it is a sacred cow, and the Prime Minister deserves credit for tackling it. So there has been a schedule of reductions to corporate tax rate approved by the Diet. And I mentioned GPIF. So the new company law, Company Act, specifies different ways that companies can organize themselves. The first two have already have existed previously. You can choose to be a company with a U.S. style of corporate governance, meaning you have a nominating committee, an audit committee, a compensation committee made up of both insiders and outsiders. Is this right for Japan? Is this right for the United States? We can argue positive or negative. I would point out that the biggest scandal, corporate governance scandal in Japan, Olympus, which many of you have heard about, had this kind of corporate structure. And so many Japanese who oppose different new styles of corporate governance would say, hey, it didn't work for Olympus. The traditional and overwhelmingly popular form of corporate organization in Japan is this thing called companies with boards of statutory auditors. This doesn't translate well into English because it doesn't really exist. It means the company is run by mostly insiders, auditors who have the ability to ask questions but not vote. Increasingly, a lot of these statutory auditors are coming from outside, but once again, the important thing to remember is they have no vote on company boards. So the new law allows for a hybrid of these two. And I don't know, a lot of investors I've talked to find that this is very confusing. It's not really helpful. But it's a kind of a peace offering to the opposition in Japan who wanted to keep the particularly Japanese style of boards of directors managing the company rather than monitoring the company, which is the style in the United States. The Company Act also kind of tightens the definition of what an independent director is. It used to be quite loose. The Corporate Governance Code is a voluntary code, which interestingly enough has been developed by the FSA, the Financial Services Agency, not by the cabinet, not by any kind of corporate organization. And again, the key fact here, the key thing here is it's a comply or explain kind of thing. Some people say this is a uniquely effective Japanese style because the power of shame in Japan is so strong. I'm a little bit more concerned about this because my experience with disclosure in Japan is that it's never used as a competitive edge as it is in the United States and other countries, and that Japanese companies kind of look around at each other and say, okay, what are you going to say? What are you going to say? We all say kind of the same thing. But maybe I'm being too pessimistic. There is also a stewardship code with the same comply or explain principle, which has been launched, which puts an onus on investors to engage in discussions with the management of companies they invest in, to have an active dialogue with them about what they think should be the strategy for their investee companies. It requires the institutional investors to disclose conflicts of interests, which are more rife than you could maybe imagine. And it also requires them to be transparent about their voting policy. Now, in this country, there is a law called ERISA, which puts a legal requirement on the investing company, to avoid conflicts of interest. Again, Japan has chosen to go this comply or explain route rather than put any kind of legal requirement on financial investors. So quickly, this is what Abe expects or hopes to achieve by improving the level of corporate governance of Japanese companies. And these are all extremely important, extremely beneficial, extremely exciting things for investors. I personally am very bullish about the Japanese stock market, and I think that I run into a lot of people who are, for the first time in ages, although there's still a lot of people who have been burned very badly, both in the stock and the bond market, who are afraid. So we hope that greater interaction with shareholders will lead to more disciplined allocation of corporate resources. We hope that it will accelerate consolidation and rationalization of companies and subsidiaries. It will, and it already is, giving rise to the concept of a professional CEO. As you probably are aware, 99 out of 100 Japanese companies see the CEO rise from the ranks. But we have at least half a dozen companies I can think of off the top of my head, from Kanebo to Shiseido to Suntory to Nikko Asset Management, where the CEO has been hired after having been a successful CEO someplace else. In the case of Shiseido, what's interesting is that the Japanese CEO, who is also a Columbia MBA, the Japanese CEO of Shiseido was formerly CEO of Coca-Cola Japan. So he is working for a foreign company, has been hired to lead one of the leading Japanese cosmetic companies. We hope that this will translate into a shift to merit-based system of pay and hiring as opposed to seniority, and this will open the way to greater diversity. I think Anna made reference to this in the previous session, but you will not get women into the workforce if they have to be paid on the number of years of service, because there is no way that they will be able to compete on that basis through the course of their career. We hope this leads to an increase of global competitiveness with the rising voice of foreign shareholders. I've neglected to mention that at this point, 35% of shares of Japanese companies listed in Japan are owned by foreigners. This will inevitably lead to a decline in the power of the mega banks, who traditionally have played a very strong corporate governance function. It will lead to the rise of a professional fund manager class in Japan, which does not exist now. And I suspect, and I don't think that this is one of Mr. Abe's intended consequences, but it logically will give rise to a more adversarial interaction with the government. That companies who have increasing pressure from shareholders will be less likely to roll over when government makes a suggestion. And of course, I'm thinking about the Prime Minister's encouragement to raise salaries. So I worry that there isn't enough thought being given to the creative destruction that this level of new corporate governance will give rise to. Japan is in a unique position relative to the other OECD countries in the sense that it has far less of a social safety net to catch people who are displaced. We will see a rise in income inequality. And again, I don't feel shy about saying that because Mr. Takenaka said the same thing in New York 2 days ago. There will be a definite reduction in job stability. Again, we're talking about companies that are 35% owned by foreign shareholders. Why should these shareholders want different things for Japanese companies than they want for American companies? Namely, cost efficiency among some of the other top priorities. You will see a faster shift of resources outside Japan for many companies because that's where the market is. As been said 100 times here and other places, the market in Japan for general services and goods is shrinking with the population shrinking. That's not to say there aren't new opportunities, but by and large, where economic growth is higher outside Japan, that's where resources will go. And again, I think this is in slight conflict with the Prime Minister's expectation that there will be a lot of investment inside Japan and a lot of new hiring in Japan. You will have a reduction in the level of customer services. The first slide I showed you showed that Japanese management values their customers far in excess of everybody else. But again, with more active shareholder interaction, I think you would expect to see a decline in the level of customer service. You will see an increase in bankruptcies, again, along with the consolidation that I spoke of. You will see a decline in the loyalty to the employer, which has been a key feature both of Japanese corporate life and Japanese society as labor mobility increases. And finally, institutional investors will come to dominate the markets just as they have in other developed economies. And as I say, I think the Prime Minister is to be applauded mightily for all of these initiatives, which doubtless will serve to unlock creativity, increase profitability of the Japanese corporate sector. But I'm hoping that somebody in the cabinet will be thinking about some of these other disconnects with his goal of increasing employment, rising wages, and exiting deflation. So here are some of the countervailing currents. I mentioned that the Government Pension Investment Fund is in the middle of a major restructuring. They manage $1 trillion. They have 70 employees, and there is only one person who makes decisions. So there are two strands of reform for the GPIF. The one is portfolio reallocation, which is wise. They were 60% invested in Japanese government bonds. They have reallocated a lot of that money towards the stock market, both domestic and foreign. But what concerns me is that the corporate governance reform of the GPIF seems to be quite stalled, so that structure that I mentioned, 70 employees, one person calling the shots, is still in place even though the portfolio risk has been magnified by the transfer into domestic and foreign equities. Government paternalism, we've spent a lot of time here talking about why is it that Japanese corporates or Japanese individuals are averse to risk, and I think part of it is that the government has tried so hard to get out in front of this. I can give you a couple of examples. During the banking crisis, there was no market for distressed assets. Japanese private sector was not willing to go there. And so the government orchestrated something called the CCPC, Kaitori Kiko, which was a government organized way to try to facilitate the distressed asset market. Didn't really work. The Government Housing Loan Corporation was established with a mandate to create an asset-backed securities market, much like some of the housing finance companies here. Never developed. After the financial crisis, when there was a wave of bad debts on the corporate side that nobody wanted to, there was no restructuring industry, there was no private equity industry in Japan. And so the government tried to set up and kickstart that industry by organizing something called, I always forget the name of it, help me out. It was called the Restructuring Fund or something. And lastly, nowadays, the Ministry of Trade and Industry has at least a dozen venture capital funds. I think it's odd that the private sector has never taken these opportunities, which exist, and the government, by kind of not giving an opportunity or not giving the correct incentives for the private sector to go there itself, has kind of created this atmosphere where the private sector is looking to the government always for leadership into a new area instead of boldly going where the government would like them to, instead of boldly going to where the government wants them to go. I was trying to make a Star Trek joke. Another two issues I will mention, or 2 or 3 issues I'll mention, and I think I'm going over my time, so I'll stop. But corporate IR, investor relations, is woefully underdeveloped in Japan. You may have been reading this story about Fanuc, the robotics company. Major world-class robotics company in Japan is having a fight with one of its American investors, Third Point, and has finally, for the first time in its history, decided to establish an investor relations department, although they will not see stock analysts, only investors. But traditionally in Japan, there has been a very weak investor relations function. People who become part of the IR team, like many old-style Japanese companies, it's a generalist. They're rotated in and out after 2 years, so they don't really develop the skills that this profession really demands. On the other hand, in terms of the investor base, the turnover of people managing yen equity portfolios has been rapid. I have spoken to the 2 largest mutual fund companies in America, and although they will not give me any official data, they've told me that the average length of time for somebody managing their yen equity portfolio is between 2 and 3 years. And that's because the stock market and the economy has been so boring for equity investors until recently, that people who took this job would demand to be transferred onto something more active. And so the level of expertise, certainly among American investors, is also not what we would like to see. The next issue is the timing of shareholder meetings. Again, how can we do due diligence on the companies that we're investing in when in June, this June, there are 2,100 company meetings, shareholder meetings announced. 820 of them will take place on the very same day. This is a kind of a long tradition in Japan to hold meetings on the same day to avoid a lot of ugly questioning and aggressive interactions. Let me just mention one other thing and then I'll wind up. Diversity of boards is quite difficult for a number of reasons. The first is the majority of Japanese board meetings are conducted in Japanese. So right away, that's exclusionary for a lot of good, experienced board members. The second is, in speaking with headhunters, I had the honor myself being invited to participate in Japanese boards. There is very little tolerance for having board meetings take place outside of Japan. And so if you're asking somebody to go to Japan every month for board meetings, that's an added disincentive to include foreigners. There's very little tolerance, it seems, for doing board meetings via conference call or video. So I think that's another thing for Japanese boards to have to deal with, is to how to figure out how to encompass more talent, different types of talent, when there are these sort of practical barriers. Here's just a conclusion. Many companies have already signed up to the Stewardship Code, including the country's leading investor. We suspect many companies will sign up for the Corporate Governance Code. All this is moving in the right way. There are already some very interesting cases going on. I mentioned FANUC. There's a fascinating case unfolding as we speak this week, a company called Otsuka Kagu. It's a furniture company where the chairman and founder, it's his daughter who is the president, and they are both drafting opposing measures to the board to kick each other out. And you can imagine that the daughter has much more innovative, risk-taking, open, global ideas, and the chairman is resistant to that. We do have the first female Keidanren, Japanese Business Executives Council, elected this year. I would like to say this is a very important initiative. I really applaud the Prime Minister for taking such an ugly, politically sensitive issue by the head. It challenges many of the major assumptions of the organization of Japanese society. It will release many, many, many benefits, but like with all changes, there's pain associated, and I sincerely hope that the Prime Minister's cabinet and his bureaucracy is thinking about ways to deal with it. Thanks for giving me the opportunity to share my views with you today.
Thank you very much.
There we go. Just let me try this. Okay, so I don't mess up. Thank you, Adam, for inviting me, and I see you have great wisdom in how you sequenced us, because there's some of my presentation that I won't have to cover because Alicia did. So this presentation is on the corporate governance reforms in Japan, and what's been done, which I will skip because Alicia covered it, but whether or not it's working and what we think about it. One other correction, I should have. My CV says Deputy Director in Strategy Policy. Actually, I'm a Deputy Director in the Asian Department, now working on Japan. Before I start this, let me make a plug for a book that we've written called Can Abenomics Succeed? The flyers are outside that cover a lot of these issues, but not this paper, which I'm going to talk about, but also not a new paper that's just come out, an IMF working paper on the inclusiveness of Abenomics. So your concern about the impact on inequality, we've started to talk about that in that paper. So why does corporate governance reform matter? Alicia, you covered a lot of why it matters. I'm going to focus on only corporate cash holdings, which again, as Alicia said, is one of Mr. Abe's main concerns. Japanese non-financial corporates held about 50% of GDP in cash. Their cash holdings amounted to 50% of GDP, or 250% of aggregate investment. Some of you might say, well, this is happening all over the world. In many countries, companies are holding a lot of cash. Well, Japan still stands out. It's 45% of holdings in Japan, the cash equivalent, compared with an average of half of that in the rest of the G7. And so the notion is that corporate governance reforms will force companies to use these cash holdings better, increase wages, redistribute dividends, et cetera, and that will be one of the big channels through which growth will be stimulated, but one of the big channels which will help Japan exit deflation. It's supposed to put pressure on companies to do this, in addition to the the direct urging by the government to companies to do this. So when we started thinking about how to examine the impact of this, we thought, what are some of the determinants of firms' cash holdings? They have a transaction cost motive, which is the firm benefits from holding some of its assets in cash because it saves on transactions costs. And this is going to banks and raising external finance. There's a precautionary demand motive, which is, they hold cash to self-insure against risks of liquidity shortfalls should they need it. The higher the uncertainty in a firm's liquidity position, the higher the firm's cash holdings. They hold it for an agency cost motive, which is what I'm going to talk about mostly today. So the idea being that management benefits from allocating more assets in cash than shareholders' wealth maximizing preferences might dictate. And then finally, the taxation motive. This is usually for multinational firms. They benefit from allocating foreign assets to cash so that they don't incur onerous tax expenses by repatriating earnings. So as I said, we'll focus on the agency cost. Managers, as I said, tend to have a preference for higher cash holdings than shareholders. And weak corporate governance, and particularly the lack of shareholder activism, might be contributing to high cash holdings in Japan, and that's something also, Alicia, you highlighted, because it reduces pressure on managers to use their cash in a productive way. So we started then to say, well, how does Japan compare with the rest of its G7 comparators on corporate governance? And this is an index that covers various aspects of corporate governance: board independence, audit rules, shareholder rights, and compensation. And Japan is the dotted line at the bottom of the chart. On the right-hand side, we show that Japan, with a larger set of comparators, is also on the low end, and the little yellow dot is annual rates of change between 2004 and 2008, and it shows that Japan is low and is also not changing very much. Cross-shareholdings. Cross-shareholdings can contribute to excessive cash holdings. So it's very large in Japan. The companies hold each other's stocks. They don't put pressure on each other to use the cash in a productive way for the benefit of shareholders. It's much more about individual benefits, such as the mutual protection of management in companies rather than the maximization of stock values. So just to give you a picture of the extent of cash holdings in Japan, cross holdings in Japan and how high it is. So what we did was an empirical analysis of involving more than 3,000 firms for 14 years between 2000 and 2013, using this governance index, which I just mentioned, which is a combination of the four components: board independence, audit, shareholder rights, and compensation. And what we find, using various estimation techniques, and I'm not going to go into that the corporate governance variable does indeed have a statistically significant impact on cash holdings, negative impact on cash holdings. So we conclude that improving corporate governance in Japan can help reduce excessive cash holdings. How much? We did a little experiment using the coefficients that we got from the various estimation techniques, and said if the index, the corporate governance index, were to rise from the current average of 41.5 to the highest in the Japanese sample, Japanese firms sample, to 62.5, you could have a sizable reduction in the cash. So by the way, the variable that we're looking at is the ratio of cash to market capitalization. So this number here measures the impact of the change in corporate governance index on this ratio of cash to market cap. And then we also did an experiment that says, what if you raise it from the current average to the theoretical maximum, which nobody is at the theoretical maximum, so maybe we should just skip that line and focus on the first line. There's still sizable gains to be had, something like 2% to 8% of the reduction in the cash to market cap ratio. And that's just the first round impact. as Prime Minister Abe has said, it is about reducing these. It's not just about reducing cash holdings. It's for cash holdings to feed into wages and investment, consumers to start spending it, and thereby pushing the economy in a durable way out of deflation. So the impact on the Japanese economy, it can be great. So what's been done, I'm going to skip this because Alicia gave a very detailed and much better description of this than I could. And let me just focus then on, is it working? So as of February 2015, so a month ago, a total of 184 institutional investors, including the GPIF, had adopted the Stewardship Code. The percentage of listed companies which have appointed outside directors increased from 47% in 2013 to 61% in 2014. But the percentage of outside directors out of total directors remains quite low still, 8% compared with 70% in the US, 50% in the UK, and 30% in Korea. So the fact that this reflects, of course, the fact that Japanese companies have only 1 or 2 outside directors. We went through Alicia went through some of the reasons why there are built-in disincentives, but maybe this number will increase. This has been, in the last year or so one can be hopeful. But then the question is, so one aspect of whether it's working is just to go through these numbers. The other aspect is to see whether it's having any economic impact. And here, the news is not so good. It's been quite limited, in fact, not visible so far. Cash holdings of listed companies as a percent of market capitalization remains very high, still at 41%. Companies have kept on piling up cash after the Lehman shock, despite a rapid recovery in profitability, which we've seen now almost across the board, especially for the large companies. And the dividends remain on a declining trend. As I said, despite an increase in profitability, as of April 2014, which is the most recent available data, there's been no noticeable increase in the dividend payout ratio amongst companies listed on the Tokyo Stock Exchange, even though the operating profit ratio has picked up quite sharply. So these data suggest that so far, the corporate governance reforms have not led to a major economic impact. But to be fair, it's not been a very long time, so maybe we'll see some of these results, see some of these numbers changing in the period ahead. We do see some pickup in M&A activity in value terms, but I don't know if we can attribute that to corporate governance reforms. The increase does not seem to be terribly out of line with historical values. So it's difficult, I think, to attribute it to the reforms that have just been implemented. Now, the Japanese government the authorities, when we talk to them, they put a lot of stock in this reform. They call it a game-changing reform. From Alicia's presentation, she talked about the different ways in which it is a game changer in many ways. But I think one of the things that we have to appreciate is it may be a game-changing reform in the culture of Japanese corporates, but for it to have a major economic impact, it will take time if it ever happens, and B, we'll see how long that time is. And then I want to just circle back to the other, to my first slide on the different motives for holding cash. Transactions motive and precautionary. I mean, we think there's still a lot of uncertainty about what growth in Japan is going to be. The third arrow of Abenomics hasn't really been amounted to much so far. And as long as that uncertainty remains, it's very hard to see why firms would invest. You're starting to see a little pressure on labor markets now. For the first time, there's going to be an increase in base wages, a big increase in base wages this year. That is, in fact, a major positive. Whether that will continue and be sustained for a long enough period to boost consumption remains to be seen. So I think, and certainly on investment, we're not seeing any pickup yet. And that has to be because firms are there's just not a lot of visibility about what the future holds. So I just have a couple more things and then I'll be done. We think what more could be done, and again, you had a slightly different viewpoint from Alicia, so we can debate that. We think it could be, the corporate governance reforms could be more ambitious. They could be more ambitious in its requirement for independent directors. We also think that there's scope to implement tax and regulatory reforms to discourage excessive cross-shareholdings, removing bottlenecks that currently prevent takeovers, and measures aimed at reducing the threat faced by firm managers in case of filing for bankruptcy. This of course will change. It is a big change in the corporate culture and will probably come with some negatives. You talked about greater destruction of bankruptcy of firms, and I guess the question is, but isn't that what we want to some degree? And so I guess we can talk about when it becomes too much. And then my last slide, by the way, this is not a scientific thing in any way in the sense of sequencing of reforms, etc. But we just took a look at the various reforms that have been listed under the third arrow of, actually the whole Abenomics package, and said if each of those reforms were to be put in place, we think that potential growth in Japan could rise from our current estimate of 0.4% to about 1.5%. I warn this is a very simplistic way of looking at things. We haven't thought about the time that it will take for these reforms to take effect. But I think it's much more in the spirit of what Tasuku presented in terms of the aspirations of where growth could be. Of course, we're not quite as optimistic as you all are, but we have, as I said, potential growth going from 0.4% to 1.5% with a full implementation of the larger Abenomics package. So thank you very much. Let me stop there.
Thank you. Now we will open it up to questions, but I wonder if I can take the prerogative of the chair to ask Tasuku the first question. Both you and Michael have pointed to the great payoff that can come from adopting global best practices, big productivity gains, big payoff. And you made the point that this doesn't require government intervention. It's a purely private phenomenon. But could you say a few more words about what is the push that's going to bring this about, or the pull that's going to lead in this direction? What is the dynamic motivation that might be able to enable this to take place, please?
Two things. The basic alignment is we said majority of the opportunities can be captured purely through the private sector, but we are not saying all. 50 to 70% can be captured by the private sector. Two things. One, the management intent to push that forward. Second is actually societal not necessarily pressure, but societal alignment that the government will support that, the society will support that, but in the end, the private sector matters. So those are two things. I would like to deep dive on these 2 points. One, as a management consultant, I'm also discussing lots of things with the top management of the companies. It is very interesting that the more globalized companies, the CEOs, top management of more globalized company and getting really pressure from the outside world, those players actually do talk about those kind of corporate governance. Those people do talk about the required level of skills for the best practices as to multiple functions. So the first most important thing is that each individual company and their top management realize the importance of those elements by pursuing further growth and getting to the new field of the business. So it's really driven by where they are going to play. That's one thing. Second is, as Michael mentioned in the previous section, there are several elements that I would say facilitate or even accelerate the growth of Japan, which are on the hands of both private and public sector. So labor market force, the part, and corporate governance would be also part of that, where the government can send a clear message that this is where government want the private sector to go. I think that message, under the Abenomics, will need to further push. But those, both the real intent from the management and also the government view, government voice, are going to be the push.
If I can add just a couple of things, I think the point that you're making is, and perhaps I didn't make it clear enough, the fact that Abe is requiring companies to do better corporate governance or increase diversity. A lot of the third arrow, the problem I think that we have with the third arrow is a lot of these things cannot really be legislated. You can't really force companies to enfranchise diversities. You can force them to hire them,
yes,
but you can't force them to enfranchise them. So it's a necessary condition, but it's not a sufficient condition.
Exactly.
And until you see the Japanese society buy into that, you won't see any changes. On the other hand, I think we should not downplay the importance of him putting this out there. The second thing is that, as you say, there are many global companies that are really racing, are really trying to embrace this new world that they're in with all their might, and yet their problem is that they have neglected the training and the investment in their own staff, who are not able to rise to the challenge. And it's so funny, the complaints I hear from so many Japanese companies, law firms, manufacturing firms, service firms, about the number of staff they have who refuse to go overseas, or who just cannot speak a foreign language, and the scramble is on to source new graduates from Japanese universities who are from Vietnam or from China or whatever, who can speak other languages or have international experience, is just, it's so impressive. So I guess the conclusion I want to make, I'm always caught in this sort of schizophrenic area where I have to say to my investors, it's not going to change tomorrow. Why would you expect U.S. health reform to happen like this overnight, but you expect the third arrow to have consequences next week? No, it's slow. In the case of Japanese, I have to say, hurry up, it's too late.
Yeah, and actually in your presentation, I like the one terminology used, which is the government paternality. Government paternalism. I think that's actually the fundamental sort of the challenge in the mindset of the Japanese society and also corporations level. The people are talking about, so what would the third arrow of Abenomics will bring to us? The real question is actually, it's like the Kennedy's speech. What the corporation can do for the government, or what the corporation can do for the society. That question should come first. Just not only waiting for something coming up from the government.
Questions, please. Yes.
Hi, thanks. A question about GPIF. Where are we in the portfolio allocation? Are they fully allocated? And maybe you could give a little more color around that. And then a follow-up to that. To the extent that GPIF is potentially a bellwether for other smaller public pensions and other large institutional investors in Japan, to what extent are those other organizations, which I assume also have very high relative holdings of low-yielding Japanese assets, where are they in taking the lead from GPIF and also allocating to higher risk assets? Thanks.
Do you want to go first?
The GPIF has a new mandate, I think, to bring down its holdings of JGBs from 60, what it's currently 60%, to something like 35. That cannot happen overnight. It's happening. It's part of the QQ, the qualitative and quantitative easing strategy. The BOJ is buying JGBs from the market, and a large player in the market is the GPIF. They, as Alicia said, are investing instead in foreign and Japanese bonds. By the way, that's also why you're seeing some of the impact through the exchange rates. The purchase of foreign assets is capital outflow and therefore, depreciation at the end. Are other people following? Yes, but slowly. We think that there's scope when the full amount of the portfolio rebalancing is for the full amount of the portfolio rebalancing to be finished. We think it probably could take us into something like 2017. It's because really the market is the BOJ on the one side and everybody else on the other. So it's the capacity of the Bank of Japan to buy up the speed at which they can buy it up.
I think there's a contradiction here between improved corporate governance and what's happened with the GPIF. Because there were as I mentioned, there are two strands of GPIF reform. The first is portfolio rebalancing, and the second is management of the GPIF itself. GPIF manages $1 trillion. They have 70 people and one person making the decision. Now they've reallocated a lot of money away from JGBs into the stock market without having a clue what they're doing. They have no experts on staff. Okay? So how is this kind of reinforcing investment in the best Japanese companies? Well, there is this new index, as I mentioned, the JPX 400, which is an index constructed of companies which have the highest ROE and the quote-unquote best corporate governance. This is a major, nice thing that the TSE has done. It's great that they stuck a flag in the sand. However, when I tell you that all the mega banks are in that index, and you know something about the level of their corporate governance, you can see what I'm saying. It's a nice start, but we're at the very beginning of a very long process. A lot of the local pension funds have also said they will follow whatever GPIF does, but until GPIF knows what it's doing, I'm not sure that we're going to see, a lot of benefits in terms of rewarding the companies that are acting the best on behalf of their shareholders. And by the way, I'm sorry, but the reform of the GPF, the management of the corporate governance is being held up because of political difficulties between the head of that Bureau, of that the Ministry of Health, Welfare, and Labor, and the Cabinet Office.
In the back, please.
Pop up to the mic here. Couple of questions, if I may. Excuse me? Sorry, Adam. Phil Sonnell from Tudor Investment Corporation. A couple of questions, if I may. One is on the promotion of the investor community in Japan. You mentioned earlier. Japan introduced these thing called NISA accounts at the start of last year, I guess. I'm interested in the panel's interpretation of sort of how they've gone and how they might move to meet this move towards a shareholder investor community. And then the second question, which Adam actually may wish to weigh in on as well, is if there's a problem here with excessive cash holdings by corporates in the form of bank deposits, what about the idea of the BOJ going whole hog and introducing a negative deposit rate, which would presumably be an increased stimulus for corporates to get cash off balance sheet, for everyone to get cash off balance sheet?
I can speak about NISA very quickly. NISA has not been much of a success at all. The amounts that people can invest are very small, and the benefits are not very big. There has been some discussion about introducing a proper 401k kind of program, but as it stands now, the tax efficiency, the tax benefits for putting money away in retirement funds is negligible. Yeah, it really has, it's been a kind of a non-event. On the issue of excessive cash holdings, one of the topics that gets talked about a little bit, although I'm quite sure nothing will happen, is the case of Taiwan and now Korea, which has put a tax on retained earnings, to return it back into the economy.
Add on the NISA accounts, what they found is mostly the people who have the money to do it are the elderly people who, and all they did was switch savings from one to these accounts. So now they're thinking about it, or actually have introduced, I think, a junior NISA, which will only be where people up to a certain age are going to be eligible to open. So short answer, not much, I don't think, so far. Yeah, let me stop there.
I'd like to take a bit of longer term perspective on this topic. So cash holding. So either in the corporate sector or either in the corporate sector or the individual level, my view is actually the cash holding has been the very rational move of each individual corporation or the individual person, basically under the very unclear future foreseen, under the deflational economy. It's been just the most rational move is stay on cash. So the fundamental point that we or the society or whoever works and has to work out is how to put the positive or the positive future about Japan, and making should invest in a different manner, should make the better return out of it. And so far the government or society hasn't clearly demonstrated what is the positive future of Japan, and that is actually the fundamental challenge. I understand all the tax incentives or for the private account for NISA, or the some arguments around the tax incentive or disincentive on the cash staying in the company, but unless we don't change the foreseeable future for the society and make the mindset on that, it's actually just a very tactical short-term move and not necessarily functioning well. That's my first. Yeah. Sorry?
How does that happen?
So that's why we McKinsey try to contribute to put the positive future. But the continuous debate around the growth, and in the end, why the private sector has to take the actions, it's not because just only the cash use. It's not only because of the ROIC improvement. It's actually to contribute to the growth of the Japan's economy. The private sector has to take the lead. I think that is the fundamental message that the society has to put. That's my view. Go ahead.
I forgot to answer the question on negative interest rates. We've heard from the Japanese authorities that they don't know how that would work at the same time that they're trying to do their quantitative easing, where people have to be willing to sell them their JGB holdings. So they don't think it's consistent.
Well, what an interesting and stimulating panel. Please join me in thanking all three of our panelists.